Putin's economy is stalling and Russia has fewer and fewer resources. In fact, the economic boost from the war is coming to an end. And even though Moscow has withstood sanctions and almost out of control inflation better than expected in recent years, now the Russian economic elite are saying that the bill is coming due. I've noticed that many of you watch my videos and I'm really happy about it, but you're not subscribed, so if you enjoy my content, please subscribe. It's free for you, but it's really vital for the project. Thank you very much. After the 2022 invasion of Ukraine, the Russian economy reorganized itself around the conflict. Defense sector companies received orders from the state, military production increased, and a part of the population even saw their incomes and opportunities rise. Precisely in the companies connected to the war effort. These companies started hiring and raising salaries to attract more workers, directly competing with the civilian economy. And in fact, Russian economic growth after the first quarter of 2023 was mainly driven by the growth of the defense sector. That's why, looking at GDP growth, Russia seemed invulnerable. The West imposes sanctions and yet Moscow keeps growing. Western companies leave, but Russian military factories make up for it. And as if that weren't enough, Russia also circumvents the sanctions by finding other commercial outlets and even replacing the West as a trading partner. The problem, however, is that a war economy doesn't work like a normal economy and its time is limited. In fact, in a normal economy, growth comes from investments in innovation, productivity, and new businesses. In a war economy, on the other hand, growth mainly comes from the fact that the state buys goods that are produced to be destroyed. And it uses taxpayers' money that should fund hospitals, schools, and infrastructure. And for a while, this model can even work, especially if the state has raw materials and a strong repressive apparatus. And Russia has these things, but in any case, it can't work in the long run. But how is the Russian economy really doing? In 2023, Russia grew by 4.1, in 2024 by 4.9, but in 2025, growth has already dropped to 1. Then came the first quarter of 2026 and the Russian economy even contracted by 0.3, marking the first quarterly decline since the beginning of 2023. To be precise, GDP fell by 1.8 in January, by 1.1 in February, and then grew again by 1.8 in March. So it's not that every month is already negative, but the Russian economy definitely doesn't have the momentum it used to, and in fact even the forecasts are being lowered. Sberbank, the largest Russian bank, has cut its growth estimate for 2026 to between 0.5 and 1. Whereas before, it was forecasting growth between 1 and 1.5, and at the St. Petersburg Economic Forum, a growth estimate of around 0.4 for 2026 even emerged. The Russian central bank finally is more optimistic, but not by much, and forecasts growth between 0.5 and 1.5. And if for a country at peace an economic slowdown would already not be positive, for a country at war, it's even worse, because you need a lot of money to buy weapons and pay the army at the front. If the economy slows, the Kremlin's tax revenues also fall. Then, of course, Putin could raise taxes, as he has already done a bit, but usually raising taxes will slow down growth even more, because it diverts money from entrepreneurs who invest or workers who spend and consume. But that's not all, because it's not just Putin who can't raise taxes too much and is trapped, but also the central bank, which can't lower interest rates too much either. The central bank should control inflation without overly slowing the economy. In Russia, this mission is complicated because the country needs less inflation and more growth simultaneously. And the point is that when interest rates are low, borrowing money costs less. Think about it. If rates go up, the cost of mortgages rises and getting loans becomes difficult. On the other hand, if rates go down, companies invest more and families can get mortgages more easily. So in that case, the economy picks up. But the problem is that if prices rise too much, low rates could make the situation worse. Because low rates mean there's more money around, and so they make prices go up even more, that is inflation. That's why central banks sometimes have to raise interest rates, because when interest rates are high, borrowing money costs more, and so companies and families invest and spend less. And so the economy slows down. And with it, inflation too, so if prices rise too much, we raise rates and slow down inflation. Does the economy slow down? We lower the rates and help growth by encouraging people to invest. But what happens if the economy slows down while prices keep rising? Well, that's every economist's nightmare, and it's called stagflation. And today, Russia risks ending up in the middle of it. And by the way, Russia already has very high rates despite the cuts in recent months. In fact, in April, the Russian central bank cut rates by 50 basis points, that's true, but they still remain at 14.5. And as we've already said, with rates this high, the economy struggles to grow because people don't invest or spend at rates this high. Borrowing, in fact, becomes practically impossible for many companies, while the lack of foreign investment due to sanctions makes it even harder to find money to grow. And according to some estimates, rates would need to be cut to at least 12 in order for investments to pick up again. The problem, however, is that the Russian central bank can't do it all at once because inflation could explode. Just think that in April 2026, inflation in Russia was at 5.7, which is very high considering that rates are already at 14.5. Just to make a comparison, the European Central Bank's rates are only at 2.5 and the Eurozone's inflation was at 3.2 in May 2026. So realistically, if Russia were to cut interest rates significantly and suddenly, inflation would start to surge again, destroying the purchasing power of Russians. In short, Moscow is trapped. If you cut rates, inflation picks up again. If you don't cut, you stop the economy. And in fact, discontent is growing in Russia. At the St. Petersburg Economic Forum, a billionaire active in transportation, fertilizers, and real estate compared Russian monetary policy to the Volcker shock. That is, to the period of very steep interest rate hikes used in the United States between 1979 and 1982 to stop inflation. Some have even compared the Russian central bank's interest rates to Western sanctions in terms of the damage they do to the economy. Even though, between us, I don't know what else the central bank could do in such a difficult situation. But what interests us is that members of the Russian economic elite are saying that with money being so expensive, the economy can't recover. And keep in mind, the fact that no one is investing, besides slowing down the GDP, will jeopardize the country for decades because investments are the future of all economies. When a company invests, it's buying machinery, hiring people, and preparing new projects. And this will not only make the GDP grow today, but also ensure it will grow in the coming years or decades. And the problem is that in Russia today, this doesn't happen anymore because companies have less money and borrowing is too expensive. And in fact, Reuters writes that several large Russian companies are reporting declining profits or losses. Corporate profits fell by 33% in the first 2 months of 2026. In March, the Russian central bank reported that major companies are cutting back their investment plans. Also confirming the crisis is Russia's domestic steel demand, which has fallen 30% in the past 3 years. And in fact, Severstal, a major Russian steel company, had to cut investments by 24%. And keep in mind, steel is a kind of thermometer for the economy because it goes into construction sites, infrastructure, and so on. So if the demand for steel drops this much, it means there's less construction and less investment, which also prevents GDP from growing. And all this data, economic damage, we have to say, is mainly due to the invasion of Ukraine, which eats up more and more resources and prevents Western capital from entering the economy because of the sanctions. But rightly, we also have to say that this data concerns heavy industry. So what about the rest of the economy? Actually, signs of slowdown are also coming from the services sector. Services are the most routine part of the economy, including transportation, professional activities, business services, and other sectors driven by domestic demand and consumption. And here it's useful to look at the S&P Global Services PMI. That is, an indicator built by asking businesses whether activity is increasing, decreasing, or staying the same compared to the previous month. And the logic is simple. Above 50, the indicator signals expansion, so economic growth. Below 50, it signals contraction, so in May 2026. The Russian services PMI fell to 48.7 from 49.7 in April, so it's below 50, and service activity has declined for the third consecutive month. Then new orders decreased for the second consecutive month with the sharpest drop in 8 months. And business and service sector confidence in the one-year outlook has fallen to its lowest level in 3.5 years. Yet the index that combines manufacturing and services remained below 50, reaching 49.2 in May after 49.1 in April. These numbers matter because they show the economic slowdown impacts both industry and services. Domestic demand is weakening and people are consuming less. This is caused by inflation reducing purchasing power, so people buy less, and by uncertainty about the future, making families and businesses more cautious. And all of this was clearly seen at the St. Petersburg Economic Forum, the so-called Russian Davos, which is supposed to be the Kremlin's economic showcase, except this year that showcase also showed signs of nervousness. In fact, some Russian economists have said that it will be difficult to return to growth with such high interest rates, with more taxes to finance the war, among other things, and less overall investment. At the forum, there were also criticisms from some businessmen, and there were even those who said that under today's conditions, even very modest growth would be almost a miracle. However, be careful, this does not mean that Putin's power is about to fall. In fact, Russia remains a state with very concentrated power. However, the nervousness of important people is still a very interesting signal. Because if even bankers and big entrepreneurs start openly saying that the war is too much of a burden, it means that sooner or later the Kremlin will have to deal with the issue. Not to mention the fact that at the St. Petersburg Forum, it was also clear that the war is no longer confined to the front lines. In fact, the port of St. Petersburg was hit during those very days, despite its distance from the border. And in general, Ukraine targets refineries, oil terminals, and sites connected to the war effort. These attacks hit one of the vital centers of the Russian economy, namely energy exports. Consider that in May 2020, 2026, Russian diesel production dropped by about 10% after a similar decline in April, because Ukrainian attacks on refineries forced several plants to reduce or stop production. And you can also see the damage when it comes to oil. In fact, in June, Russia might be forced to export less crude oil because it will have to send more to the refineries, since in some areas there's a risk of fuel shortages. And in April, Russian oil production reportedly saw the biggest drop in the last 6 years. That's between 300,000 and 400,000 barrels per day less compared to the average of the previous months in 2026. Now be careful, Russia hasn't lost its energy sector yet, and the refineries can be repaired. However, for Moscow, the situation is anything but simple. And what do you think? Will Russia be able to revive its economy? Let me know in the comments. Like and subscribe to the channel if you enjoy my videos. Bye!